Welcome to the Interest Rate Academy. Class is now in session. The federal funds rate is the benchmark interest rate that banks use to lend money to each other. It is the rate at which financial institutions trade reserves with each other overnight on an unsecured basis. The target range is set by the Federal Reserve as part of their monetary policy following their Federal Open Market Committee meetings, which usually take place 8 times a calendar year. The Federal Reserve utilizes the federal funds rate as one of the tools in the Fed's tool belt to control economic activity. Here is how it works. When the Fed wants to stimulate economic growth, they often lower the federal funds rate. Banks can then borrow money at a lower cost and then lend money to businesses and individuals at lower interest rates. This encourages more borrowing and investment. The result, a boost to economic activity. Remember, lower rates stimulate economic growth. When the Fed wants to cool down an overheating economy and control inflation, they will increase the federal funds rate. It makes the cost of money more expensive to borrow. When it is more expensive to borrow money, consumers and businesses tend to spend less, which can help slow down the economy. Remember, higher rates slow down economic growth. FOMC members who favor tighter monetary policy to restrain growth and inflation are known as hawks. Members who are in favor of a looser monetary policy in order to encourage investment and economic growth are known as doves. So, in a nutshell, the federal funds rate is the Federal Reserve's tool to steer the economy. It influences borrowing costs and has a profound impact on investment, spending, and economic growth. The federal funds rate drives the front end of the interest rate market. It has a direct effect on banks' short-term borrowing costs and lending rates. It also influences the interest rate paid on saving and money market accounts. I hope this brief tutorial has deepened your understanding of the federal funds rate. With this new insight in hand, mark your calendar, tune into the next Fed meeting, and see how their decisions impact the interest rate markets along with the global economy. Thanks for joining us today. Remember, the more you learn about interest rates and other financial markets, the better you'll be at navigating the complex world of money and investing. Until next time, don't forget to hit that like button and subscribe to stay updated with the latest in finance. Feel free to share this video with anyone you feel would find it informative.